Now that we are coming out the back of the global financial crisis, more than ever, cash is king. It's the lifeblood of every business. What business owners often do is they get caught up in doing the work in their businesses and take their eye off the ball in terms of cash flow. If a business doesn't have cash flow, it won't be able to survive. So without cash flow, a business will struggle to pay its debts. Managing cash flow is critical to the future success of any business. And any cash flow improvement strategy for any healthy business must focus on driving its debtors down, driving its stock holdings down, and maintaining its creditors at terms. Any surplus cash that exists as a result of this formula can be used by that business to make some asset purchases, to pay debts, and even to pay dividends and drawings to the owners. So managing cash flow now more than ever has got to be one of the major focuses for any business. The amount outstanding that's owing to you by your customers is represented in your debtors balance. The lower your debtors balance means that they pay you sooner. Business owners often think that getting their customers to pay sooner is often the hardest thing to do. In fact, it's the easiest. Usually it just means some systems adjustments and some focuses on structuring your arrangements with your customers so that they pay you when you want them to pay you. In terms of your stock holdings, the larger the amount of your stock that you hold, the more cash you've got tied up sitting in that asset. You need to be focusing on maintaining your stock levels so that you don't have cash sitting on your shelves. And it's also critically important to ensure that you maintain your creditors on their terms. After all, your creditors are the ones that supply you with your stock or with your resources that you need to sell. So the top 5 cash flow strategies for any business that's focused on a cash flow improvement formula of driving debtors down, driving stock holdings down, and maintaining your creditors at terms are: for your debtors, ensure that your customers have signed off on their orders prior to commencing work and have agreed to your terms. You need to then make sure you issue your invoices at the earliest possible time, but only after you've received a signed order, and then you need to rigorously implement a debtor collection process to collect all of your debtors on terms. In relation to stock, you need to assess your minimum stock holding per stock item and only order when you need additional stock, and make a focused effort to clear and sell old or removing stock items as quickly as possible. With regards to your creditors, managing your cash flow, you need to ensure that you maintain your supplier payments terms so that you can ensure that you'll receive the stock that you need when you need it to be able to provide your customers. So focus on your cash flow improvement formula means you drive debtors down, you drive your stock holdings down, and you maintain your creditors at terms.